Inflation from the Iran war is skyrocketing, and experts warn it could take years to settle. Could your wallet be feeling the impact long after peace returns? Since the outbreak of conflict in Iran earlier this year, inflation in the country has more than doubled, soaring from 35% to over 60%. This spike is largely driven by sanctions, disrupted oil exports, and a sharp rise in import costs. Global oil companies like Shell and BP have reported supply uncertainties, pushing global energy prices higher and triggering inflationary ripple effects worldwide. The economic chaos inside Iran is compounded by currency devaluation and scarcity of basic goods, creating a perfect storm for prolonged inflation. The war-driven inflation hits everyday Iranians hardest, with food prices climbing by 80% and fuel costs doubling in some regions. Families struggle to afford necessities as wages lag behind inflation. Meanwhile, global markets are unsettled by Iran's reduced oil exports. Major energy traders report volatile prices and supply chain disruptions. Companies like ExxonMobil warn that the instability could affect their Middle East operations for years, keeping energy prices elevated and inflation pressures persistent worldwide. Financial analysts from Investopedia highlight that inflation caused by war rarely fades quickly. The damage to Iran's infrastructure, disrupted trade routes, and lingering sanctions will slow economic recovery. Inflation tends to become embedded in the economy through wage price spirals and loss of investor confidence. Experts predict that even after hostilities cease, inflation rates could remain elevated for several years as rebuilding efforts and normalization of trade take time. This means inflation won't just be a short-term crisis, but a prolonged challenge. Iran is a key player in the global oil market, and its inflation crisis fuels uncertainty about supply stability. This has pushed global oil prices up by 15% since the conflict began, increasing costs for transportation and manufacturing worldwide. Consumers from the US to Europe feel the pinch through higher gas prices and rising prices on goods. Analysts warn that until Iran's economy stabilizes, global inflationary pressures linked to energy and commodities will persist, keeping everyday costs high for years. With inflation potentially lasting years, it's critical to prepare now. Experts recommend reviewing your budget to manage rising costs of essentials like food and fuel. Diversifying investments to hedge against inflation, such as commodities or inflation-protected securities, can help protect your finances. Staying informed on developments in the Middle East and global markets will allow you to anticipate economic shifts. While the Iran conflict's economic fallout is complex, proactive steps can reduce its impact on your personal finances. The Iran war inflation crisis isn't going away anytime soon. Whether you live in Iran or feel the ripple effects globally, prices will likely keep rising for years. Understanding why inflation lingers helps you prepare smarter. Stay ahead by adjusting your finances and staying updated. Hit subscribe for daily insights on how global events affect your wallet.